I welcome you, our consultants, to this meeting. With me, myself, I have my fellow management colleagues here. We are looking forward to the presentation that you have presented, prepared for us today, looking at our company performance for the period that we have provided to you. So feel free and also do the best you can to give us a nice presentation. Over to you.
Thank you. Good afternoon, Chairperson, members, and fellow colleagues. This is Group 1. We are pleased to share our presentation with you today. My name is Faith Bufeanu, and I'm joined by my colleagues Daniel Manda, Precious Tembo, and Martin Chimangi. In this presentation, we provide a detailed financial appraisal of Malawi Property Investment Company, MPICO. A brief background on MPICO. It was established in 1972 by Capital City Development Corporation, and it was listed on the Malawi Stock Exchange in 2007. MPICO is one of only 2 publicly listed property companies in Malawi, and it specializes in ownership, leasing, management, and development of properties. As of now, MPICO portfolio has 27 properties covering 67,800 square meters across the country, specifically in Blantyre, Lilongwe, Mcheu, and Nzuzu. The ownership structure of MPICO Limited as of 2024 is as follows. Old Mutual Life Assurance Company has 42.98% shares, followed by Old Mutual Malawi Limited with 53.98%. Then Public Service Pension Trust Fund with 19.46% shares. General Public has 21.55% shares, and Lincoln Investments Limited with 5.01% shares. The objective of this analysis was to assess MPICO's profitability, liquidity, efficiency, and investor returns to provide data-driven strategic recommendations over fiscal years of 2020 to 2024. For this analysis, we used 4 methods. First is horizontal analysis. On this one, we reviewed financial performance trends over 5 years, focusing on income, operating expenses, and profit growth or decline. The second methodology is vertical analysis. In this, we assessed income statement items as percentage of total income to evaluate cost structure and income composition. The third is ratio analysis. On this one, we applied key financial ratios across 4 categories. That's profitability, liquidity, efficiency, and investor metrics to measure overall financial health. Last method is peer benchmarking, where we compared MPICO's performance with Icon Properties Limited, the only other listed property companies in Malawi, to highlight strengths, weaknesses, and opportunities for improvement. I now invite the next presenter to take us through MPICO's overall performance trends over the past 5 years. Thank you.
Thank you to Faith. I will now take on the presentation, reviewing the overall performance of MPICO through a horizontal and vertical analysis, as well as looking at some adjusted financials. Looking at the overall performance of MPICO as an overview, we can see that MPICO's revenues have shown consistent growth over the past 5 years, moving from 12 billion in 2020 to 21 billion in 2024. This is consistent with growth in profitability, as we may see, with profitability being reported to have grown from 9 billion in 2020 to 14 billion in 2024. Expenses have also been managed effectively, as it may seem, from 2 billion in 2020 to only 6 billion in 2024, showing that MPICO has consistently managed their operating expenses. This is just from an overall perspective. We can also see that total assets from MPICO have grown from 79 billion in 2020 to 118 billion in 2024, keeping in line with the consistent growth that has been reported over time. However, when we look at when we critically analyze the financials, we will soon realize that a good margin of the reported total income is composed of fair value gains, which is basically income that does not come from funds that does not come from funds that are directly linked to operating activities, but rather income that is generated from valuations. So we'll see that when we exclude the fair value gains from the financials, MPICO's profitability and total income, MPICO's ability to generate income has only marginally improved from 7 billion to 9 billion between a 5-year period, representing only a 2 billion growth over the 5 years. During the same period, expenses have also grown at a similar margin, starting with 2 billion in 2020 to now, starting with 2 billion in 2020 to now having 6 billion in expenses. This shows that the difference between total generated income, or rather total generated income from operations, and the expenses is quite closely linked, with expenses slightly growing at a greater rate than that of income generated from operations. During the same period, we'll also see that profitability has declined from a profit before tax of 4 billion in 2020 to a profit before tax of 2 billion in 2024, representing approximately a 2 billion decline in profitability during the same period. Another observation that we'll make is that MPICO's reliance on reporting fair value gains as part of total income directly influences its perception of profitability. As you will see that net cash flows from operating activities in 2023, it had rather a negative net cash flows in 2020 due to a one-time tax payment, which resulted in net cash flow being reported in 2023. But this has since improved to 6 billion in 2024. But this is very worrying if you look at the financials through that lens. Moving on to our vertical analysis, where we looked at income statement variables using total income as a factor, we will notice that total incomes, or rather funds from operating activities, the composition of funds from operating activities has declined as a factor of total income from 59% to only 42%, representing an almost 12% decline between the 5-year period that MPICO has been reporting. And conversely, the composition of fair value gains as part of the total income has increased from 39% to 56%, which is very worrying. This also corresponds with a decline then subsequent recovery of profit before tax and profit after tax reporting for the same period, which is a very big concern. I will now hand over to a colleague who will now look at the profitability and liquidity metrics from MPICO.
Thank you very much, Daniel. I will look at ratio analysis from MPICO, specifically on profitability, liquidity, as well as investor ratios and efficiency. On profitability, I'll start with return on capital employed. From MPICO in 2024, it is at 10.82%, which is a significant jump from the previous year, which was 6.84%, which means now MPICO is generating profits better than in the last years. Then I'll look at net turnover. This has been almost consistent at around 0.08. Comparing to Icon properties, it is way better because Icon net asset turnover is at 0.05, while on MPICO is at 0.08 in 2024. Now I'll move to current ratio and liquidity. The current ratio is, as of 2024, 5.6, which is much better, and it's showing that MPICO is able to meet its current obligations without struggles. Debt stock equity ratio, it has dropped significantly from 0.17 in 2020 to 0.01 in 2024. This means that MPICO has improved financial stability. On investor ratios, earnings per share, here we will just compare 2023 and 2024 financials because we want investors to make better decisions based on the current performances of the MPICO. So on earnings per share is now at 5.3 from 3.08 in 2023, reflecting improved profitability and value creation for shareholders. Dividend per share has also increased from 0.38 to 0.38 in 2024, from 0.22 in 2023. This is indicating a stronger commitment to shareholder returns. Dividend cover has remained around 14, from 14.05 in 2023 to 13.95 in 2024, which is about 14 as well. And this is signaling that MPICO can sustain the payment of dividends even if there is volatility in terms of earnings. Asset turnover has declined sharply from 0.97 in 2023 to 0.09 in 2024, which is suggesting that there are some underutilization of assets. Now I hand over to Martin